I don't care how long it takes. That's why I'm out here. I want my pension back. I don't care how much money Boeing is losing.
What's estimated to be the costliest American strike of the 21st century might be coming to an end. Boeing union members decide today whether they want to accept that sweetened contract deal.
Yeah, if members accept that deal, they'll head back to work after more than 7 weeks off the job. If they didn't, their strike will continue. Amy Colley reports on the vote's national and global implications.
For me personally, it's okay. Could it be better? Absolutely.
Hello, everyone. Today, we're diving into Boeing, one of the biggest names in the aerospace industry, but a company that's been facing some serious turbulence lately. We'll break down how recent events, from labor strikes to a major acquisition, are impacting Boeing's financial health, production, and future potential. By the end of this video, you'll know whether Boeing is a stock to buy, hold, or sell right now, so stick around for our complete analysis. Before we dive in, if you're interested in more in-depth investment analysis like this, consider subscribing to our newsletter, link in the description below. It's a great way to stay informed. Let's start with an overview of Boeing's current situation. Recently, the International Association of Machinists and Aerospace Workers District 751 went on strike, halting production of key aircraft models like the 737, 767, 777, and even the advanced 777X. This production stop has dealt a serious blow to Boeing's financials, hurting both its revenue and cash flow. To add to this, Boeing has faced another setback after an accident involving Alaska Airlines, which slowed production even further due to renewed safety and quality measures. However, amidst these challenges, Boeing is making a strategic move by acquiring Spirit AeroSystems, expected to close in mid-2025. This acquisition is intended to stabilize Boeing's supply chain and boost production efficiency. And with a massive $510.5 billion backlog, demand for Boeing's products remains robust. Now, let's take a closer look at the numbers to understand Boeing's current financial standing. For the 9 months ending September 30th, 2024, Boeing reported revenues of $51.275 billion, a decrease from the $55.776 billion reported in the same period in 2023. This drop in revenue is mainly due to fewer deliveries in the commercial airplane segment, partly because of issues with the 737-9 model. Net losses also soared, hitting $7.9968 billion compared to a $2.2112 billion loss last year. The steep increase in losses comes down to higher charges on defense programs and complications with the 777X and 767 models, and of course, the impact of the IAM strike. Supply chain constraints and quality control costs have pushed operating margins lower, impacting Boeing's cash flows and adding to its debt load. So, what's Boeing's strategy moving forward? The company is focusing on stabilizing its operations, which involves improving its execution on new projects and addressing production disruptions. The acquisition of Spirit AeroSystems is a big part of this, aimed at creating a more integrated and resilient supply chain. Additionally, Boeing is working on a safety and quality management plan to meet regulatory standards and ramp up production rates. These steps are essential for Boeing to regain its leadership in the aerospace sector, but the success of these efforts hinges on resolving labor disputes and restoring stability to the supply chain. Of course, Boeing faces several risks. Labor strikes, like the one we're seeing with IAM, have halted production of some of Boeing's most profitable models, which hurts revenue and slows deliveries. Supply chain bottlenecks and quality issues continue to disrupt production schedules, driving up costs. Then there's regulatory scrutiny, especially after the Alaska Airlines incident and the grounding of the 737-9. These ongoing issues could lead to more delays and possibly hefty financial penalties. All in all, these risks pose challenges to Boeing's short-term and long-term financial health. Now let's turn to the technical side of things. Boeing's stock has been highly volatile, with prices ranging from $146.02 to $267.54 over the past year. Currently, the stock is trading around $155.07, which is on the lower end of this range. The Relative Strength Index, or RSI, is around 39.83, close to oversold territory, indicating potential for a rebound. However, the Moving Average Convergence Divergence, or MACD, shows a bearish trend, with the MACD line below the signal line, suggesting that downward momentum could continue. Key support levels sit around 146.02 cents, with resistance around $267.54, giving potential entry and exit points for investors watching the stock. When we look at valuation, Boeing appears overvalued compared to its current earnings potential. With a market cap of around $115.93 billion and a forward PE ratio of 234.95, the stock is expensive, especially considering its negative price-to-book ratio, a reflection of the financial challenges Boeing is facing. So, what's the investment recommendation? In the short term, Boeing's outlook isn't promising. With ongoing labor disputes, supply chain disruptions, and regulatory challenges, the stock's current momentum is weak, and volatility remains high. Given the company's declining revenues, high debt levels, and valuation metrics, the recommendation is to sell Boeing stock in the short term. It seems unlikely that these issues will resolve soon enough to provide a positive return in the next few months. However, looking at the long term, 3 years and beyond, the story is a bit different. Boeing has a solid backlog, a strategy for stabilizing its business, and management focused on addressing key issues. While the path forward is uncertain, if Boeing can resolve these problems, it has the potential to regain its position in the aerospace market. Given the balance of risks and opportunities, the long-term recommendation is to hold Boeing stock as the company works through its challenges and aims for future growth. Thanks for sticking with us through this analysis. If you found this video helpful, don't forget to subscribe, like, and leave a comment with your thoughts. And if you want even more insights like these, be sure to check out our newsletter. Link in the description below. We'll keep you updated with the latest market insights and investment strategies. Disclaimer: this video is for informational purposes only and does not constitute financial or investment advice. Always do your own research and consult a financial advisor before making investment decisions. Investing involves risks, including potential loss of principal.